What up, though? D, No Wheel Drive 229. And today, this is a car channel, but we're gonna switch it up just a little bit. I mean, it's still really about, indirectly and about cars and about your life. But here at No Wheel Drive, you've been hearing us say live good lately. Just the overall channel, we wanna focus on just living good, positivity, and your life, health, wealth, just making good, safe decisions, thinking about your future, but also, having a little fun at the same time. So today we're gonna talk about financial situations, in particular, whether or not it's a good idea to go ahead and purchase a home. Because a lot of people feel like this is always a good idea, this is talked up so much. Oh, do you own a home? Yada yada, America kind of pushes up owning a home, kind of puts it on a pedestal, and it is a good thing. It's definitely a good thing. Real estate is definitely one of the most tried and true ways to financial independence, financial stability, really, is not only owning your own home, but then venturing into owning rental properties or rental real estate, or selling, buying and selling. There are people who do that. Definitely real estate can be a great tool to financial freedom. However, the way that most people go about it is a trap, and I'm gonna tell you why. Most people's mortgages is a trap. So why do I say that, and why am I not itching to buy a home right now? Why am I really planning things out and waiting? Well, me and Marilyn, look at Marilyn, there she go. Look at the mole, oh yeah. Me and Marilyn are gonna tell y'all why. Okay, so let me break this down for you. Okay, so a mortgage, right? Most people do 30 years, right? So, first of all, let me drop some knowledge on you. Let me break down the etymology of the word mortgage, because most people don't know this. I mean, I'm sure you know that a mortgage means basically you paying back the loan you took out on a home, or it could be a traditional single family home, condo, whatever place or property you purchased. The mortgage is you paying that back to whatever lender you purchased it from over a period of usually 30, can be 15 or even 10 years. So that is what a mortgage is, but let's really break down the word mortgage. Okay, so a mortgage is made up of two words, mort and engage. Now, do you know what those two words mean? Mortgage means a death pledge. Why do I say that? Mort, the first four letters of the word mortgage, is Latin for death. Hence, mortality rate, things such as this. So death, and then gauge is a pledge. Hence, engagement ring, things of this nature. So the very word mortgage means death pledge. Now, why would it be called a death pledge? Well, let's think about it and let's break this thing down. So most people are going to buy a house when they're about 30. I guess this would be, a fair assumption. Some, a little earlier, maybe 25, some a little later, maybe 35. But let's just use the fair age of 30. After college, maybe you've had your first child, maybe you've traveled a little bit. Most people are gonna buy a home when they're around 30 years old. Okay, so you buy a home at 30 years old. Let's say you do the 30-year mortgage. Let's say you get the 4%. So there's several things that we can break down, but let's just start with the money aspect of it first. So here on my phone, I have a loan calculator. Well, actually I have a Z06 as my background. Come back up. Yeah, actually I have a Z06. Here on my phone, I have a mortgage calculator. So let's really break this down. Let's assume that you purchase a house for $275,000. I feel like that's a round average number. Here in Georgia, houses tend to be a bit cheaper, so you're gonna get quite a bit of house, even in the Atlanta area, for that amount of money. But certain other areas, Cali, New York, that's gonna be like kind of bottom of the barrel there, $200,000 range. So but this, I felt like it was an average number for a home, just random places in the United States. I felt like 275 would be a good assumption. Let's say somebody's purchasing a house for $275,000, right? So let's really break this thing down really quick. Assuming the house is $275,000, then over the course of 30 years, assuming an interest rate of 4%, because right now they're going about, 3.9, so I just put in 4, just to make things round and even. And if your credit's not the best, you're not gonna get that 3.9 anyway, so I'm just assuming your credit's average and you get somewhere in the 4 range. So let's assume on the positive side that it's 4. And keep in mind, interest rates are low, like not all time low, but they're pretty low right now. Like, back in, the early 2000s stuff, they were up near 10. They were up 8, 9, 7%. So they're headed back that way. So right now it's about as good as it's gonna get as far as mortgage rates. So let's assume 4%. Over the course of 30 years, you would pay $472,000 to pay off the loan, including interest. That is almost $200,000 more than the house is worth. Let's assume that it goes to 5%. In that case, you would pay, assuming that the rate just goes up to 5%, or maybe your credit isn't the best, or your income, for whatever reason, the bank won't do it, they'll only give you 5%. Over the course of that loan, you would pay $531,000 for a $270,000 house. So, when you really think about it, is that the best move? Because in 30 years, after purchasing it at assumed age of 30, how old will you be? You will be 60 years old and have paid almost twice as much as the house is worth. So that is why it is death pledge, because you have nothing left to do but die. The average life expectancy is 72, and a lot of people are not gonna make it to that. Trust me, I know, I see it every day. A lot of us are not gonna make it to 72. So when you sign that 30-year mortgage, not only are you paying way more than the house is worth, but also you're setting yourself up in a position where if anything happens, you're gonna have to sell the house. Because people glorify home ownership. Oh, you drive this car, but you don't own a home. But I'm like, you don't own your home either. Stop paying on your house and see what happens. Don't worry, I'll wait. Stop paying your mortgage and see what happens. They coming to get your joint, bruh. They running up in your crib, bruh. They putting the eviction notice. It's not going down, bruh. So, whether you rent or own, until you've paid it off, then you don't really own the house. The bank owns the house. The lender owns the house. Whoever, lent you the house owns the house. And so, say for instance you lost your job, you are now in a position where you either have to sell the house, or just for whatever reason have a significant loss of income, fall on bad times. You either have to, if you're not able to pay the mortgage, sell the house. If not, you're going to default on a house, which is going to set you back for years. And so a mortgage isn't really, to me, especially a 30-year one, isn't something to be glorified. I mean, why would you boast saying, oh, I own a home? I mean, it's nice. I mean, it's definitely something to be proud of, I guess. But, for 30 years paying on something, pretty much until you die, death pledge. That's what I'm gonna start calling it instead of mortgage. I'm gonna start calling it a death pledge because that's what the name means. That's what it is. So I'm gonna start calling it death pledge. Before you sign a death pledge, really think about things and make sure that it makes sense for you. Paying cash for something, obviously, especially a house, isn't always feasible. And like we even mentioned with the cars, you definitely don't want to tie up all your capital into something if you don't have it. So you don't want to go 30 years, but for most people, paying it off outright isn't an option either. So I feel like what the smartest option is maybe, doing that 15%, 15-year, doing a 15-year mortgage, and also doing the recommended 20% down. I feel like that can really help to alleviate some of the ridiculousness of paying for something for 30 years. Because if you think about it, if you put down 60, matter of fact, let's use our same little example that we were using earlier with the $275,000 home, and let's switch it up and let's see how much that would change if we put down 20% and did 15 instead of 30 years. Let's see how that would change. So we're still gonna do 20 interest rate, but we're going to 20% of 275 It's almost gonna be 60,000 because 300, that would be 60,000. So I'm just gonna say 50,000. Say we put down 50. So now, instead of paying a total of 500 and I think 33,000 it was, our total is 299,000 paid, and that's only about 70,000 more than the loan is worth. And in 15 years, we'll have a house paid and cleared off. By age 45, we'll be chilling. We can either rent the home out and, you know, just chill out, maybe get a smaller home. Maybe, you know, our kids are grown at that point. Maybe we don't need that big of a house, so we can rent that one out and stay in a smaller home and have extra capital coming in, because now we in a position where we have passive income. So like I mentioned, purchasing a house is a smart idea. Just going about it the right way so that you can enjoy the true benefits of your purchase until you're darn near dead is, to me, a much smarter option. So even though with 15 years you're gonna have a bit higher payments, how we can alleviate this is, like I say, start planning and saving while you're young. Because like I say, most people don't get one till they're 30 anyway. So like, you know, like me, I'm sure Calvin is, we're saving up so that by the time we're 30, we can put down 20, or I plan to put down even more than that, maybe up to 40, 50%. Put that down on the house, then we can pay it off in 15, maybe even 10, 5 years. And you know, by age 35, 40, have a house paid off and not have to be stuck into a mortgage where we have paid. Because think about that, over your life, you've pretty much just given away $300,000. Just giving it away. But why? When you could have just waited a little bit when you were younger, saved up money, put that down so that your monthly payment wasn't too crazy, because true, your monthly payment's gonna be more with $1,500. Making sure that you can get a house that you can afford, because if you have to do the 30-year mortgage to afford it, can you really afford it? It's almost like getting a car, you know? If you go out and get, you know, a freaking M3, but you work at McDonald's and you finance it for 12 years, yeah, you got an M3, but you finance it for 12 years, and you're gonna be paying probably 3 times as much as the car is worth. Same thing with a house. So just make sure that you really calculate things out. Make sure you really plan. Make sure you really can afford it. You know, everybody's situation is different. So make sure you really study, know how finances work, know the background of things. Like I say, most people don't even know what mortgage really means, that it means death pledge. Mortgage is Latin for death pledge. Most people have no idea about that. So just really make sure that we're all making smart financial decisions, not only with cars, but just whatever in life. Definitely a house is one of the better things. So if you're gonna waste money, then waste it on a house, and you know, it might pay off, especially how the economy turns. But this just been my 2 cents, little financial discussion. D Noah Drive 229. Let me know what y'all think. You think buying a house is still smart? You think 30 years is smart? You think 15 smarter? Let me know what y'all think. Or you can just rent the whole time. There's arguments to be made that if rent's cheaper, and if you save the money that you pay on, because we didn't even talk about taxes, you know, property taxes, maintenance on the house, we didn't talk about those things. But that's also other added expenses onto your mortgage. So when you rent, you don't have to worry about any of that, and you can save the excess money and reinvest it and possibly come out ahead of somebody who paid on that mortgage and paid that interest for especially those 30 or even 15 years. But that's assuming that you're wise with your money you save on rent, and most people aren't. Most people are gonna spend it on stupid stuff like S5s. But yeah, assuming you save your money that you are saving on rent and, you know, put it toward an investment, put it toward a business, then, you know, eventually you may come out ahead of somebody who does do a 30-year mortgage. So definitely let me know which option you all think is smarter. Just rent and invest, 15-year mortgage with a down payment, or the traditional 30-year mortgage. Which one do you all think is the smartest decision? That's pretty much all I got. Make sure y'all think about it. Make sure y'all live good. Be healthy out there. And it's D Noah Drive. By the way, there is an exhaust video coming. I know everybody's asking for it. I want to hear the audio exhaust. I know, but we need Calvin's camera for that. And it was nighttime when I saw him last. We didn't want to put the video up of, you know, we wanted it to be daytime when we do the exhaust video. So as soon as we get back to as soon as we get back to Calvin, who has the microphone on his camera, then we'll do the S5 exhaust video. So that'll probably be coming this weekend sometime soon. Got more stuff coming. We're gonna get the wheels. They're gonna be Vosin. That's coming soon. I can't think of nothing else. So yeah, D, Noble Drive 229. Live good. Y'all have a good day. Oh, and say bye to Maryland, by the way, everybody. Say bye. You better say bye.
It's for